Let's talk about how you can improve your trading game in a smart and practical way. I want to focus on finding trades in a very specific zones where price is more likely to react. As you already know, support and resistance flip areas are one of the core trading methods out there, and they are used by millions of traders around the world. So basically what happens here is that a strong old support area that has been holding the price for a while suddenly gets broken. Then the price starts to move back up toward that old support area. And what we expect at that point is for that old support to act as a new resistance. This is usually where we step in and play our game around these multi-imbalance trading locations. Now here is an interesting question to think about it. During the pullback, if the inner structure is bullish while price is moving towards the support and resistance flip location, can we take small scalp longs? And yes, the answer is absolutely yes. What we are doing in this situation is trading a counter trend, basically looking for a small reversal using the inner bullish structure. Is it riskier than usual? Yes, it is, because you are trading against the main higher time frame here. But it can still be usable sometimes, especially if you don't see any other clean setup in the market. However, the main trade idea still sits around the support and resistance flip line. What we really want to see is strong rejection candles forming around the SR flip and the multi-imbalance area. And more importantly, that rejection should be followed by a clear structural change. That means the inner trend should be also shift from uptrend into a downtrend. But most of the time, that first market structure break can be tricky. There can be a lot of fake moves and false breaks in the beginning area. So if you want to more secure and higher quality trades, it can be smart to wait one or two more structure breaks forming the clear downtrend here. As you can see, what you are really doing here is playing the both sides of the game. You take the riskier longs during the pullback, and then you focus on better, higher quality shorts once everything lines up. Now let's take a look at a couple of real examples directly on the charts. What you're looking at right now is the hourly chart. The hourly chart is a great starting point to understand the current price action and the overall direction of the market. Notice how the recent price created this extremely large imbalance location, then pushed back into it, and after that it completely crashed down. As you can see, this move happened right inside a significant support and resistance flip location. It was a strong old support level that later turned into a resistance area. And right here at that level, you can clearly see a nice swing failure pattern forming. So everything is lining up together here, including multi-imbalances, multi-swing failures, and SR flip location on the higher time frame. Now I'm going to drop down to the 5-minute time frame to see what is happening inside the inner structure, the low time frame structure. First of all, you can see that at some point there was a bullish run that got created. We had the first market structure break, followed by another break of structure moving towards the multi-imbalance and SR flip location. However, the moment price tapped into our higher time frame concepts, the inner trend shifted once again. We then created a bearish market structure break, which clearly shows that the sellers are stepping in and taking the control back. And here is the important tip that you need to remember. If you struggle with using market structure breaks, then simply wait. Wait for the next clear break of structures to form. Let the downtrend become more obvious and more structured before you make a trading decision. And then, as the price starts dropping aggressively, you can use different methods to enter a short position here. For example, you can use inner imbalances or maybe build small average cost entries in the area to help to push the trade further to downside, especially using my yo-yo style dollar cost averaging methods. Okay friends, another great lesson ends here. Please stay safe and sound. Be ready for the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.